The chances of a Comex default. This is by Bill Halter and it was written today. The first couple of paragraphs is explaining that he's putting his point across to another guy who has an opposite opinion. But what I'm interested in is his facts. So I'm going to read the segment where he explains exactly what the situation is. Let's look at the numbers and use a little common sense. Currently in the Comex gold and silver vaults, we see there are roughly 17 tons of gold and 32 million ounces of silver registered, i.e. available for delivery. This amounts to about $680 million worth of gold and $540 million of silver. A whopping total of $1.2 billion, or less than half a day's interest on the US federal debt. In today's world of trillions and quadrillions, this amount is pocket change. I put these registered inventories forth so we can have something to use as a base for comparison. Looking at silver, there are now 1 billion ounces represented by 200,000 Comex contracts of various months. For May alone, there are 280 million ounces represented by these paper contracts. By comparison, the world, excluding China and Russia production, produces 700 million per year. So we have a market with a claimed 32 million ounces that prices, for now, a market which produces 700 million ounces per year. This 32 million ounce inventory is the guarantee being used or promised to deliver on contracts, 280 million ounces worth for May and 1 billion ounces in total, whose owners can decide they would want delivery. If you look at other commodity markets, there are none as egregious as silver. Currently, open interest represents 140+% of global production. In other words, the paper market is far larger than the real physical market. Not so in other commodities, where the paper markets are typically 10 to 15% the size of global production. Going one step further, with this 32 million ounce inventory, we saw a 10-minute span on Thursday morning where 37.5 million ounces of silver were dumped all at once. The effect, of course, was nearly a $1 drop in price. This was done as silver looked to be breaking out price-wise to the upside. The massive dump was used to contain price. We saw this again on Friday, when over 100 million ounces were dumped in just 1 hour. In perspective, Thursday's dump equated to 19 days of total global production, sold in 10 minutes. Taking Thursday's and Friday's 70 minutes together saw the equivalent of 2.5 months of global silver production sold. Again, who actually has this amount of silver, and who in their right mind would ever sell it in the fashion to get the absolute worst price possible, unless they wanted the worst price possible? Taking a brief look at how inept the registered gold inventory is, Shanghai has been importing 30 to 40 tons per week for several years now. How many days worth of Shanghai imports will Comex 17 tons cover? The above speaks to the woefully small registered inventories claimed by Comex. For a mathematical standpoint, both silver and gold stocks could be wiped out in just one trade. Bob says this does not matter, and no default can ever happen because Comex can settle in paper. I agree with his statement. Comex can settle in paper because it appears they have been doing this for years rather than delivering real metal to all of those standing. I do now have smoking gun proof of this, but just ask yourself the question, who would fully fund their account in order to take delivery? Wait until the very last days of the delivery period and then just go away. This happens time and time again. I believe it can only be explained by cash premiums being offered and paid. If you have another plausible explanation, I would love to hear it. But by plausible, I mean to say it must include real logic. Now, is cash settlement, because there is no gold or silver available to deliver, considered a default? According to Bob, the answer is no. I would simply ask you this. If the Comex can only settle in cash, then what is it exactly that you are trading? Of what value is the contract which cannot perform and deliver the product you are supposedly trading? It is the first reason I've said for many years we will end up seeing a two-tiered market where there is one price for paper derivatives of gold and silver and the other higher price for the real thing. In fact, we are already seeing the early stages of this with backwardation, particularly in London. To finish, until recently, we were told that all markets were rigged except for gold and silver. We were just nutjob conspiracy theorists to think gold and silver markets were rigged. But now we find out we aren't nuts after Deutsche Bank admitted guilt and paid a fine for rigging the London fixes. The fine, by the way, was not small potatoes. It was $5 billion, or roughly 5 times the dollar value of what Comex claims to be able to deliver. I assure you, Deutsche Bank did not hand over $5 billion out of the goodness of their hearts, nor did they take lightly pleading guilty, as they will now be sued by the mining industry to the moon and back. Even more curious was their decision to turn state's evidence. I certainly do not have the particulars, but I can observe and connect the dots. The metal markets are acting very differently, and the commercials, if COT numbers are to be believed, are extremely short, while registered inventories are extremely low. Financial stresses in Western credit markets are again showing quite similar to 2008. Central banks have already fired interest rate money supply bazookas, with sovereign treasuries far and wide have destroyed their balance sheets. Would it be crazy to believe fear capital will flood into the only monies on the planet that have neither counterparty risk nor are anyone else's liability? Actually, from the mathematical standpoint, all of the globe debt can only be paid back if currencies are debased, which guarantees a flood into the gold and silver market. Would it be considered a default if the US had to print so many dollars that it took 1 million of them to purchase a cup of coffee? In the situation where Comex inventories get cleaned out, isn't this the same thing as a bank in the old days running out of gold? That was considered default then, but morality wants you to believe it is business as usual. Sorry, I don't think so. So there you go. Stand and watch.